Hi, my name is Frankie. Welcome back to FAQ Show. Today, we're diving into the story behind EcoShop's IPO. How a humble 2 ringgit discount store grew into a multi-billion ringgit retail empire. We'll explore how founder Datuk Sri Lee Ka-Wat started the business in Johor, the secret recipe behind EcoShop's explosive growth, and how its recent IPO minted Malaysia's newest billionaire. We'll also break down key financial highlights from the IPO prospectus, discuss why EcoShop cut its IPO price, and what that means for investors, and consider whether you can still join EcoShop's growth journey post-IPO. So grab some popcorn, let's get started. Our story begins in 2003 in a small town called Jementah in Johor. That's where Lee Ka-Wat, together with his brother and 2 friends, opened the very first EcoShop outlet. Back then, it was just a tiny store with big idea. Sell everyday goods at the rock bottom fixed price. Lee's vision was very simple. Make essential items affordable for all Malaysians. Little did he know, this 2 ringgit store concept, yes, almost everything costs 2 ringgit only, would strike a chord with shoppers nationwide. For years, Malaysians have loved to hunt for good bargains. From pasar malam deals to wholesale mart, EcoShop tapped into that love by promising a uniform low price on most items. Initially, nearly everything was 2 ringgit, hence the dollar store nickname. Over time, due to rising costs, the price point crept up slightly. Today, it's 260 in Peninsular Malaysia and 280 in East Malaysia. But the premise remains: super affordable, fixed pricing. This 260 store model turned everyday shopping into a mini treasure hunt, where customers know exactly how much they will spend for each item. Fast forward 22 years, and EcoShop's growth have been staggering. From that single Johor store, the chain now boasts 358 stores across Malaysia, including 22 larger Eco Plus outlets. It's a true nationwide network, reaching from big cities to smaller towns. In fact, EcoShop commands about 68% of Malaysia's dollar store retail market by revenue. And through all this expansion, Datuk Sri Lee still runs the company from Jementah, Johor, where it all began. Imagine that, a multi-billion ringgit business headquartered in a small town, not KL. It's a testament to the company's humble roots and cost-conscious culture. Now, you might be wondering, what's the secret recipe behind EcoShop's success? How did they scale up from a kampung store to a retail giant while keeping prices so low? Let's dig into that. EcoShop's formula for success isn't about fancy tech or luxury branding. It's about keeping things simple and affordable. Here are 4 key ingredients in their secret recipe. Firstly, the core strategy is the fixed price model. Most items cost just 260 ringgit. This builds a everyone can buy appeal, drawing in thrifty students, housewives, and budget shoppers in droves. By sticking to low prices, EcoShop encourages customers to buy more items per visit. In an era of rising living costs, EcoShop's promise to keep daily necessities affordable resonates more than ever. Second, walk into an EcoShop and you'll find a bit of everything. Snacks, stationery, toiletries, kitchenware, toys, you name it. Over half of the products are EcoShop's own house brands. By developing in-house brands, the company can source or manufacture cheaply and control costs and quality. This means they aren't just a reseller. They have bargaining power with suppliers and can maintain decent profit margin despite the low selling price. Now, thirdly, EcoShop is obsessive about keeping costs low. They operate distribution centers and import many goods in bulk. The company uses various mechanisms to keep import costs down. For example, sourcing directly from low-cost manufacturers. Even the corporate HQ location in small town Johor likely saves money on rent and overhead. All these efficiencies help stretch the ringgit for many people. Last but not least, instead of relying on a few big outlets, EcoShop blanketed the country with many stores. The strategy? Open outlets in urban centers, suburbans, and rural areas alike. By being everywhere, they became a household name. The plan is to keep expanding. EcoShop aims to open around 70 new stores each year for the next 5 years. effectively doubling its store count. That's aggressive growth enabled by fresh IPO funds, and we'll talk about the IPO in a moment. All these elements combined to turn EcoShop into a retail phenomenon. By 2024, annual sales had hit roughly 1 billion ringgit. Yes, 1 billion ringgit in revenue per year. And millions of Malaysians were regular customers. That success set the stage for the next big chapter, the IPO. In April 2025, EcoShop officially launched its IPO prospectus. And on 23rd of May, the company listed on the main market of Bursa Malaysia. It was a highly anticipated debut. In fact, the largest Malaysian IPO in about 8 months at the time of this video recording. And it didn't disappoint. The listing turned founder Lee Ka-Wat into a billionaire overnight. Let's talk numbers. Initially, EcoShop set an indicative IPO price of RM1.21 per share, which would have valued the company around 7 billion ringgit in market cap. At that size, Lee, who was and remains the majority owner, stood to hold a stake worth nearly 5 billion ringgit. Even Forbes and Bloomberg were buzzing. Here was a self-made retailer about to join Malaysia's billionaire club. However, just before the listing, EcoShop made a strategic tweak. They cut the IPO price to RM1.13 per share. Why the cut? We'll dive into details later, but essentially it was to ensure a successful sale amid choppy market sentiment. At RM1.13, EcoShop debuted with a market cap of roughly 6.5 billion ringgit. And Lee's shareholding, around 73.1% post-listing, was worth a whopping 4.7 billion ringgit, approximately $1.1 billion. In one stroke, he became one of Malaysia's richest individuals. Not bad for the owner of a chain where everything costs just a few ringgit, right? To put it in perspective, Lee Ka-Wat, 52 years old, now holds about 4.2 billion shares of EcoShop. His stake went from 80.3% pre-IPO to about 73.1% after the IPO. The difference mostly came from new shares issued to the public and a small portion sold by existing shareholders. Interestingly, EcoShop's early private equity backer, Credor, which bought a 10% stake back in 2019, took the IPO as an opportunity to cash out most of its holding. Credor's stake shrank from 10% to just 1.9% post-IPO. So yes, even at a slightly reduced IPO price, EcoShop's listing dramatically increased the founder's wealth. Lee is now often dubbed Malaysia dollar store billionaire. And he's not just paper rich. Through the IPO, the company raised a lot of cash for expansion. And some selling shareholders like Credor, possibly some of Lee's partners realized gains too. It's a big win-win. The business gets growth capital and the founder achieves billionaire status while still retaining control. Now, before we go further, let's highlight some key financial stats from EcoShop's IPO prospectus, the kind of numbers investors love to go into before subscribing to IPOs. EcoShop's prospectus is packed with data, but I've distilled 5 key financial highlights that potential investors typically look at. 1. Surging revenue and profit growth. EcoShop's financial performance has been on a steep upward trend. During FY 2024, revenue hit 2.4 billion ringgit and net profit was 177 million. That's a 26% jump in revenue and a whopping 70% jump in net profit compared to the previous year. Such growth indicates improving efficiency and strong customer demand. Number 2. Healthy profit margin. The net profit margin in FY24 comes out to around 7 to 8%. That's quite solid for a discount retailer selling low-price items. It suggests EcoShop manages costs pretty well. The company's strategy of using in-house brands and bulk sourcing contributes to these margins. In fact, over half of its sales are from its own house-branded products, which generally yield better margins than reselling third-party brands. Number 3. Dominant market share and store network. As mentioned, EcoShop holds about 67.8% of Malaysian dollar store segment by revenue, effectively becoming the market leader. It had 358 outlets, including 22 Eco Plus stores as of March 31st, 2025, far more than any competitors in this niche. This extensive footprint itself is a financial asset. It will be very hard for new rival to replicate. 4. Valuation metrics. At the IPO price of RM1.13, EcoShop was valued at around 36 times PE. That is on the higher side for retailers in Malaysia. For comparison, Mr. DIY trades around 27 times earnings, and convenience store chain 7-Eleven Malaysia is about 56 times, while 99 Speedmart was valued 39 times. So, EcoShop's IPO valuation was not the cheapest, but also not the priciest. Investors will be watching if the company can grow into and beyond that valuation by increasing future earnings. Number 5. Robust earnings and IPO proceeds utilization. EcoShop is profitable and generated 93 million ringgit net profit in just the first half of 2025, indicating momentum continued into the listing year. The IPO itself raised about 392 million ringgit in fresh funds for the company after the price cut. According to the prospectus, this money will be used to expand distribution centers, open more stores, upgrade IT, and repay debt, plus cover listing fees. Using half of the IPO funds to beef up logistics and another chunk to reduce debt is a positive sign. It shows the company is focused on sustainable growth and improving its balance sheet, i.e. paying off loans. Now, speaking of sentiment, why did EcoShop have to cut its IPO price? Let's unpack what happened during the listing process and what that implies. At the final stretch of the IPO exercise, EcoShop slashed its IPO price by 6.6% to RM1.13 just before the IPO shares were allotted. This move raised some eyebrows among investors. Essentially, during the book building process, that's when institutional investors place orders for shares, EcoShop didn't get quite a strong demand at RM1.21 as anticipated, especially from certain segments. In particular, the retail portion for Bumiputra investors, a tranche reserved for approved Bumiputra investors, was undersubscribed. Overall, the public retail offer ended up just about 0.96 times subscribed, which means it barely got full take-up. For context, many hot Malaysian IPOs see retail oversubscription of 5 times, 10 times, or even more. Some market observers expected stronger interest given EcoShop's size and brand. Meanwhile, the institutional portion was fully subscribed, no problem. In fact, EcoShop had lined up 10 cornerstone investors who anchored most of it. But to ensure smooth sale of all shares, the IPO price was adjusted to RM1.13. You see, in IPO practices, cutting the price can be a yellow flag. It suggests the initial price ambition was a bit high or that the market had reservations. Investors sometimes interpret it as a sign of weak demand, not the best look for a debut. However, that's another angle. The company and underwriters might have been prudent. By pricing a bit lower, they increase the chances of a solid first day performance. You see, nobody likes an IPO that drops below issue price on day one, right? In EcoShop's case, this cautious approach paid off. The stock jumped about 10% on its first trading day, hitting an intraday high of RM1.25. It closed slightly below, but that's still above RM1.13, meaning investors who got the IPO at RM1.13 saw immediate gains. A pop on debut often creates positive sentiment and momentum. So, the price cut reflects that investors had some concerns, perhaps about valuation and market conditions. But it also showed that EcoShop and its bankers were willing to be flexible to make the listing a success. In the end, EcoShop still raised roughly 392 million ringgit for the company and about 582 million ringgit for those shareholders who sold their shares at RM1.13, which is very substantial. The market cap was only marginally lower than initially targeted, and more importantly, a wider base of investors got in at a friendlier price, which can be positive for the stock's performance. From the founder's perspective, yes, Lee Ka-Wat got slightly less on paper due to the pricing tweak. But we're talking about a difference of maybe 300 million ringgit in his stake value, still leaving him with 4.7 billion ringgit. Plus, he likely didn't sell many of his own shares. Most shares sold were from Credor and possibly a small portion from him. End result, he's still a billionaire many times over, and the IPO was well received after listing. This brings us to an interesting point. After such a successful IPO and price jump, what's next? For regular investors who missed the IPO, is EcoShop still an opportunity worth considering? Let's discuss the post-IPO outlook, potential upside, and its risk. Let's start with the growth story. The IPO wasn't the end game. It's a new chapter. EcoShop plans to double its store count in 5 years, adding 70 stores per year, which, if achieved, means a lot more revenue. There's a sense that Malaysia's dollar store concept still has room to run. Also, EcoShop can leverage the fresh IPO funds. With new distribution centers and debt paid down, it could become even more efficient and profitable. Its house brand strategy will continue to bolster margins and customer loyalty. The company's leadership position, 68% market shares, gives it an advantage in negotiating rents, supplier terms, and etc. All these are positives for long-term growth. So, yes, the growth story is intact and investors can still be part of it by buying shares. But, and this is crucial, one must weigh the risk and strategy before jumping in. Now, investment strategy. If you're considering EcoShop stock, here are a few pointers. Number 1, do your homework as always. Read through the prospectus or research reports to understand the assumptions behind the growth plans. For example, what store expansion is feasible per year? How much each new store contributes to profit? Number 2, think long term. This is not likely a quick flip, despite the nice first day jump lah. EcoShop's investments case is about capturing a long-term consumer trend. If you believe the company can roughly double its revenue or profit in the next 5 years, then investing and holding could be rewarding. Number 3, watch out for their quarterly results. Now that it's public, EcoShop will report earnings regularly. Watch for consistent growth in revenue and profit. Each hiccups, say a weak quarter, could impact the stock given the high expectations. Number 4, entry price matters. If you feel RM1.20, just an example price, is too high, you might wait for a dip. Markets can be volatile. There might be chances to buy on broader market weaknesses. Some analysts have target prices. For instance, one broker was reported to have a target of RM1.45, implying an upside. But take such targets with a pinch of salt. Also, don't forget to diversify. No matter how good a company is, don't put all your money in one stock. EcoShop operates in the retail sector, which can be cyclical and affected by consumer sentiment. It's wise to have a balanced portfolio every time. Finally, consider EcoShop's potential beyond Malaysia. While currently all stores are domestic, could they expand regionally? The prospectus hints at plenty of domestic opportunities still, but maybe in the longer run, a regional expansion could be on the table. If that ever happens, it could unlock new growth frontiers, but it would also bring new risk. Now, whether you are Malaysian retail investors or foreign investors intrigued by emerging market opportunities, EcoShop is a company that encapsulates a lot of what makes Southeast Asian market exciting. Growing consumer classes, innovative business models adapted to local needs, and significant room for expansion. It's a story of doing well by doing good, making essential goods cheap, and in the process, creating enormous value for shareholders and wealth for its founders. I hope this has been insightful and engaging for you, whether you're considering investing or just love a good business story. As always, invest wisely and do your own due diligence. Thank you for tuning in and see you in my next video.